Good afternoon, everybody. Can you hear me?
Yes, sir.
Okay, wonderful. Just giving, okay, looks like just about everybody is here. We'll just start off with my register as usual. Welcome back into our second week of accounting already. Time passes quickly when you're having fun. Vanessa, are you there?
I'm here. Good night.
Good night, good night. Wonderful, excellent. Okay, there we go again. Hadis.
Hi, good evening. Sorry, sorry. I got a call coming. Go ahead.
Did I say that correctly this time, Hadis?
Yes, you did. Yes, sir, you did.
Lovely. Welcome back again.
Thank you. Just leaving work.
I know that is. Clinton.
I'm here. I'm here.
Okay, yeah, great, fantastic. Mario.
James, hello.
Okay, right there. Fantastic. Danielle. Martin. Okay, Danielle.
Hi, I'm here.
Hi, Danielle. Crystal. Okay, on the way. Blaine.
Good night, I'm here.
Hi, Blaine. Okay, and last but not least, Denise. Okay, so those who, the one or two, I guess they're on their way trying to get through all the blah, blah, blah. Any questions before we begin? Anyone?
Good
Did you have a
evening.
chance to read chapter 2?
Hi,
Hi, who said hi?
this is Herminique speaking.
Hmm.
I just
Herminique?
joined class this evening.
You're just joining us?
Yes.
Okay. Then I need to get some data. How do you pronounce your name, Miss Miller?
Herminique.
Veronique. Okay,
Yeah.
let me put that down here
Okay.
so I can get that correct. H-E-R-E-A-N. Very unusual.
Yes.
Veronique Miller. Okay.
Mhm.
Now, Veronique, I'm going to give you my email address and phone number. And what I want you to do after the class is to send me your contacts, like your email address, which will come in the email that you send, telephone contact, and place of employment. Or you might even say that tonight when I ask you to introduce yourself. But certainly, your telephone contacts,
Okay.
okay, would be great, so I can find you when I need to find you. All right, so welcome aboard, Veronique. You didn't miss too much, fortunately. We're just going into chapter 2. Do you have a textbook already? Veronique, do you have a textbook already? Okay, she'll join us in a minute. All right, did everybody get to read chapter 2? Yes,
Yeah,
no, sort
yeah.
of?
I want to read over it a bit.
Okay.
Yeah.
It's okay if you don't get to the whole thing. The initial reading is just to get you familiar. Then we chit chat about it. Then you read it again. Then you get homework, which will be forthcoming. Not to worry. Does everybody in the room have a textbook so far?
Yep.
Okay.
Yes.
12E edition. Was anybody able to find 12E online? Was anybody able to find 12E edition online?
Oh, I didn't look, actually.
No, I didn't find it.
You were looking like I was?
I did.
Yeah. Somehow they made 12E a little scarce for some reason. Online at the moment. All right. So in any event, I've been hunting around for a 12-week edition as well to bring up on my screen.
Recording in
Okie dokie. Nick, you were saying something?
I was saying my internet went out. Sorry about that. I cut out for a few.
No problem. Well, while we have you, why don't you just introduce?
Okay, my name is Herminique Miller and I'm an employee at Fidelity Bank. And I work in the customer service and support unit as an administrative assistant.
Okay, excellent. And you're doing accounting because,
I wanted the certificate in accounting, but I think it's a few other courses that I have to complete as well.
okay,
So I guess just as a means to grow in my
the,
career.
accounting is always a good idea, whether you think so or not at the time. I try to tell students, people, others, it's always good to have some accounting background, no matter what profession you are in,
Mhm,
because it just exposes you to a lot of practical information outside of the accounting mumbo jumbo that you learn along the way.
mhm.
All right, so we're into chapter 2 of our text.
Okay. I have,
Um, you have a textbook already?
I do.
Great. All right, so let's just jump right into it. Does the new edition have the learning objectives at the beginning? Anyone?
Yes, sir. It has learning objectives to explain the double entry system and the usefulness of T accounts in analyzing business transactions.
Okay,
Uh,
excellent. Because that's what we're going to be talking about throughout this evening. What about there's a little something on the left-hand side of my screen that says making a statement. Do you guys see that?
No, I don't have that on the first on page 42.
What about 43? What about anywhere in chapter 2, making a statement? Anybody has anything like that in chapter 2?
I don't recall seeing that. Making a statement.
That's a little like that bloody edition. The reason why I said that, because the making a statement that's at the beginning of the 11E edition shows us the 1, 2, 3, 4 key financial statements. Anybody remembers what they are that we talked about in chapter 1? The 4 key financial statements.
Yeah,
Take a shot at it,
so it's the income statement,
right?
and then a statement of owner's equity, the balance sheet, and then it's cash flow.
Absolutely. Please take note of those 4 statements. They will hound you until the end of accounting 1. And when you do accounting 2, they'll hound you to the end of accounting 2. These are the standard reporting statements that accountants use everywhere in the world to report financial information. Okay? So however you learn to remember, do that so that you can remember these statements throughout. Okay? Remember the income statement reports revenues minus expenses, which equals net income or loss. The statement of owner's equity, of course, represents the investment in the company. And so basically it shows whatever the opening investment is in the company, plus any income that is made, minus any withdrawals that are taken by the owner to come up with an ending statement of owner's equity. Okay. And again, you'll see these things a lot, so don't worry. I'm just making noise with them so you can start hearing it. The balance sheet, of course, is made up of the accounting equation, 3 major components. Anybody knows what those 3 are? Remember?
The operating activities, the financial, that's what you're talking about, activities?
Not that one, but we're coming there. The one before that, balance sheet. What are the 3 main elements of the balance sheet?
Um,
It's the same element.
Assets, liability, and the owner's equity.
Yeah, assets, exactly. Liability,
liability and the owner's equity.
equity, yes. Those are the 3 main elements of the balance sheet. Does anybody remember the formula for the accounting equation?
That's the
Yeah.
same thing. Assets equal
Asset
liability.
liability plus owner's
plus
equity.
owner's equity.
Fantastic. Just like these financial statements, that equation you want to learn by heart until you come to understand what it really, really means, okay? You'll see that quite a bit in one form or another as we go forward. And the final statement, the statement of cash flows, really looks at three aspects in the accounting world: operating activities, which is the income statement, investing activities, and that which is the capital statement, and then financing activities. But we'll see that later. I don't want to get you all ruffled up in that stuff just yet. I want us to go through what we're going to talk about in chapter 2, which is the analyzing of business transactions. So chapter 2 is really designed to get newcomers to accounting to understand the language of accounting, to see how we apply the basic principles of accounting to transactions, how we record them, because how well and how accurately we record transactions will determine whether or not the financial statements we talked about are going to be correct. Okay, so it's kind of like the foundation of the accounting process. You get it right, you have strong, correct financial statements. You get it wrong, you have weak, incorrect financial statements. And a lot of people in the world will be happy. And if your luck is really bad, you might be out of a job. Okay, that's that important. All right. Now, there are a couple of principles that I wanted to mention before we get into the analyzing of transactions. One of them was called the recognition principle. Anybody saw that when you were reading?
Yeah.
Yeah, basically, what did the recognition principle say? In a nutshell, what did the recognition principle refer to?
Is when to record a business transaction.
Yeah, basically, when do we record a business transaction? Okay, and that is sometimes not as easy as it seems for some people in the accounting profession, depending on what area of accounting they're in and exactly the level of knowledge that they have. Okay, and so the example they gave, I hope that's in your edition. They gave us a flow of activity, beginning with the employee sending a purchase requisition to the purchasing department. Anybody knows what a purchase requisition is?
It's an order. You place an order for supplies or something.
Yeah, that's pretty good. It's a document where you write up a request for stuff that you need from the
Yeah,
purchase.
like an invoice.
Yeah, absolutely. Not the invoice yet, but like an invoice, yes. It's kind of a request to purchase. Okay,
Yeah.
that goes to the purchasing department. The purchasing department looks at it for the details of what you want and also the authorizing signature before they go ahead and make any purchases whatsoever. Then, of course, the purchasing department would then send a purchase order to the supplier. The supplier looks at it to make sure everything is in order before he or she supplies the goods. And then once the supplier is satisfied, they go ahead and ship the goods. In this case, the desk, I think they refer to. The company then receives the desks and also receives a bill from the supplier, of course, who is anxious, no doubt, to get his money. And then, of course, the company pays the bill. Nice fairy tale rotation. That's how it should work in a simple transaction where there's a purchase involved. Now, we are told that according to accounting tradition, how about that? A transaction should be recorded when we receive title to the goods. In other words, for accountants, if the goods are still with the supplier, we should not and cannot record that transaction. Does everybody get that?
Yes.
No transaction should be recorded by no accountant in this room anyway until you receive title to the goods. It passes from the seller to the buyer, which is your company. Keep it simple that way, you wouldn't have any problems. Some people sometimes, for some reason, like to start recording stuff like before they actually get title. They say, oh, it's coming, we might as well record it now. Not in accounting. Okay? I think somebody's mic is open. I had a little rattle. Yeah, great. And so be careful, if you work anywhere where you're dealing with accounting, do not record any transactions until your company actually takes title to the goods. That's very important. Because until you get title, you don't what? Until you get title, do you own anything?
You don't own the goods. You don't, then, yeah,
No, you don't own anything. And if you don't own
exactly.
it, what are you doing recording it? Okay?
Right.
Basically the point. All right, so that's a very important concept in accounting that you need to know. By the way, you guys have a little thing called focus on business practice in your text?
Sorry, I didn't hear you.
Do you have a little section in your text as you go called focus on business practice?
No, we have apply it.
Oh, apply it, but not focus.
No.
Man, how unfortunate. All right, I'll get to apply it a little bit later. It's just that these other little bits and pieces add so much insight sometimes into the material. When they change the addition, sometimes they take out some good stuff. All right, so the recognition principle is the first order of business. It deals with making sure that the company has title to the goods. Let me ask the ladies in the room something about equivalent to titles. If you get engaged, are you married?
No.
No.
No,
No, so you can't take title to to the goods until when?
When you walk down that aisle.
Can you sign a paper?
Yeah, not even when you walk down the aisle, because somebody could change their mind on the way down.
That's true. That's true.
When you sign the paper, yes. The title does not pass until you sign the marital documents. That's it. Anything before that could happen. And anything has happened in one form or another. So this thing about taking title is very serious business. All right. Accounting is all about economic events. And in your text somewhere, you should see some examples on economic events or transactions that should and should not be recorded as a business transaction. As newcomers to accounting, all I can say is these are very important things to remember, okay? Because they form the foundation to proper recording of transactions. Remember what I said earlier? If transactions are not recorded properly at the beginning, dog eat your lunch. I don't care how fancy your statements look at the end. I don't care how much work you put into it, they will be incorrect. Okay, it's as simple as that. All right, so let's look at some events that are not recorded as a transaction. Number one, anyone? Anyone? Do you have that in your
Fundraising, you think?
sorry?
I'm guessing fundraising.
Why would
Supplies bought for the business use?
the suppliers what?
Supplies bought for business use, like if you buy water and it's to be used for employees using the water and not to be sold.
Oh, interesting that you should say that because that's a concept we're going to talk about later. I know which one you mean, but that's not for this one yet. But hold
Okay,
on, 'cause that's going to come. And that's
okay.
another important issue. Okay, let me ask you something. Suppose a customer inquires about the availability of a service. Is that a transaction?
No, it's not.
No.
No. No, it's only a what? Inquiry.
It's only an inquiry.
Yes. Okay. Suppose the company hires a new employee. Is that a transaction to be recorded?
No.
No. We don't record the hire of a new employee. We record their salary once they get paid, once the money starts rolling around, but we don't record the actual hire of the new employee. We don't debit or credit the hiring of the new employee. What about this one? A company signs a contract to provide a service in the future.
Yes, you can record that.
Why would you do that?
I try and remember right now, but I know you can record that. I know I read that. Something like
Well, I know where you're going with that too. But the tricky thing about accounting is this. You could sign a contract for a service in the future. Accounting doesn't care what you do in the future. We don't record nothing until it actually happens. Does everybody get that?
Yeah, so that goes back to like your title, your receipt until you have the goods in your hand. The contract isn't fulfilled yet.
Remember, you could sign a contract for the future, but somebody could break the contract. Right? Correct?
Agree.
Yes, right.
It's not binding.
I mean, it may be binding, but people can still break contracts that are
Break
binding,
Yeah, that's true.
and then we have to take them to court for breach of contract. So accountants don't want to get into that kind of stuff. We don't speculate. Accountants do not speculate. We only record when a transaction actually has already happened. Does everybody get that? Nothing before.
Yes, sir.
Okay, we don't deal with we go, so prepare the transaction. No, 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 no. Accountants will tell you, go and do it first. Whatever the hell it is, go do it first. Then when you've done it, bring us the proof that you've done it. Then when you bring us the proof, then we will record it, not a moment before. All right, something to remember.
So unless, Mr. Wilkinson, they have somewhat of a deposit for the future services.
Even if they have a deposit for the future service, the accountant will record that in a
Yeah.
certain, because you actually took a deposit. You see, once you take a deposit, that's a transaction. Does everybody get that? So even though the service has not been provided yet, you're collecting the money in advance, that becomes a transaction. So now the accountant has something to record. Okay?
Yeah,
So if you're taking money now for a service you're going to provide in the future, that is what accountants call unearned revenue, because you haven't earned it yet. So what the accountant will do is, if you give the company $10,000 in cash, we'll record the cash as a debit to cash and a credit to unearned revenue. And it sits there until something happens for the revenue to be earned. Okay? But other than that, if nothing happens, if nothing is exchanged, if there's no transaction, we don't record. Okay, we don't operate on the future. Accountants operate on historical transactions, things that have already happened. Okay. What about when a customer buys a service or a product? Is that a transaction?
Yes.
Yeah, it is.
Yeah, it's a sale.
What about when a company pays an employee for services rendered? Is that a transaction?
That's a
Yes,
trans-
it is.
Yeah.
Yeah, it is. Question? All right, so there you go. All of that stuff is part of the recognition process. And you can see why we spend a little time on it, because it's crucial. If you don't get that right, you're going to mess a lot of things up. What about the concept of valuation? What are we told that is? Valuation.
That's basically assigning a monetary or some type of value amount to a business transaction.
Absolutely. The other important thing in accounting, all accounting transactions must be in dollars and cents, or some kind of currency of the world, monetary currency. That's what the valuation concept is all about. Okay, you can't put any trees and cars and buildings on physically on the balance sheet. They must all be translated to monetary amounts, whether it's USD dollars, yen, Swiss francs, whatever the case might be. It must be monetary, period. No ifs, ands, and buts. Two very important principles so far. Principle number 3, the cost principle. What is that?
That's recording like transactions at the exchange price. Once you would have recognized what the item, you
Yes.
recognize that the item needs to be recorded. And so that's actually, yeah.
Yeah, the cost price is the exchange price between buyer and seller. It is an amount that accountants can verify very easily. I'm buying this from you for $300, therefore the cost of it is $300. There's no dispute there, okay? And that is what the cost principle is about, okay? And the reason why we call it the cost principle is because it is verifiable. There's no doubt about the amount involved in such a transaction. Okay? 3 important principles right off the top. What about classification? What is that?
That deals with assigning all transactions in different categories.
Oh yeah. Remember earlier when I asked you about those 4 financial statements? A whole bunch of categories are there. There's a category called revenue and expenses and net profit and assets and liabilities and owner's equity and statements of cash flows. There are a whole lot of classifications. And that's another word you'll see in action soon. Okay. All right. So those are some of the key principles of accounting that you must remember going forward, because they are going to be your guiding lights. Okay. Now, we get into a little discussion about ethics and measurement. I hope everybody knows what ethics means in this class. Anybody? What is ethics? What do you think ethics is?
You died answering now. Someone else.
Yeah, somebody else answer. She said, I'm sick of answering stuff. Anybody? What is ethics?
Ethics would basically be your ability to decipher right from wrong.
Yeah, simple. You're not only in addition to your ability, but actually practicing, because a lot of us have the ability to do stuff, but we don't do it. We have the ability to tell the truth, but we still what?
Go wrong.
Lie, absolutely. For what reason or another? So most times we have the ability. The question is, are we doing it? And ethics does not require only your ability to be fair and honest, but actually requires that you be fair and honest. Okay? I hope you have in that chapter some examples with Enron and WorldCom. Do you have those?
Yes, we do.
Good. Please don't read over them. All right, because they are typical examples of wrongdoing, also known as unethical behavior. The accounting profession does not tolerate unethical behavior, even though many accountants and accounting firms have acted unethically before, presently, and no doubt will in the future. But we have to have a standard. People will always move away from the standard of what is right and wrong, but we need to have it anyway. Okay? So Enron did all kinds of crazy stuff. They violated all kinds of accounting principles for valuation, for example. Look what it did. It values assets in a way that was outside of the requirements of GAAP. Notice, for far more than the actual value. That means if they had certain assets that were valued at $1 billion, because Enron was a multi-billion-dollar company, they increased it without any transaction to maybe 3 billion, so that they can show a better sales figure, a better net profit figure, and pay themselves even more money than they were already paying themselves before. The executives of Enron. Enron ended up collapsing. Most of the employees who've been there 20, 30, 40 years, the majority of them lost their pensions that the company was keeping for them for all their working life. Some people couldn't take it, they committed suicide. Other people lost their minds, and all kinds of crazy things came out of that unethical behavior. Okay? So, yeah. It is imperative when you go to work, you try to do the right thing. Worldwide, that's what is expected. But we'll always have folks who are trying to do something else. All right. Somebody mentioned you have stop and apply. Please stop and apply when you see it. Stop and apply is just to give you practice and the concepts that you've learned before stop and apply. Now, sometimes if you're tired at night reading, and you see stop and apply, I say, man, I'm not reading that. I'm tired. Or some such thing. Don't do that. Go through it quickly, see how it applies to what you've read. It will reinforce the information that you have studied. Okay? All right. So now we can get into the double entry system. Now that we know those principles that we have to consider in accounting, and now that we know that we have to be ethical and do things right and proper, we can now get into the nitty-gritty. Anybody remembers what I said the double entry system was? Did we see that in chapter 1? The double entry system. Did anybody read it in chapter 2?
A double entry system would be like a debit and credit.
Yeah.
I read it.
Yep, that's what it is. For every debit,
There's a credit.
Credit, and they must be equal.
yes. For every debit, there must be a credit. Not could be, maybe, might be, none of that stuff. For every debit, there must be a credit, and they must be the same amount. Anybody who messes with that concept in accounting will destroy any semblance of proper accounting. The whole foundation of accounting is based on the proper administration of the double entry system. So we're going to spend the night talking about how double entry items and transactions work, because going forward, unless you understand those principles clearly, some things are going to get messed up big time. Okay? But a couple of things before we get to the actual transaction. When we talk about accounts in accounting, we're just talking about a location where we store financial information. For example, our checking account shows whether we have a debit balance or credit balance. If you have a debit balance in your checking account, what does that mean? Anybody knows? In the
Can you-
real,
Can you repeat the
Yeah.
question?
Your account is in the negative.
which means
You're
You
overdrawn.
owe people. You owe the people some money. Exactly.
overdrawn, and if it's a bank account, you're overdrawn, you owe the bank money.
Right.
Usually the bank will not allow you to go overdrawn unless you have a what?
Overdraft facility.
Absolutely. If you do
That's for
not
the
have,
bankers.
yeah, if you don't have an overdraft facility and your account, and you have $300 in your account, you write a check for 350, what will they do?
They're fine.
They return it and then charge you for being overdrawn.
But, well, for returning the check, they will not allow it to go overdrawn.
Mm.
You have an overdraft facility. Okay? If you do not have an overdraft facility, they will return it and charge you an overdraft fee. Anybody knows what the standard overdraft fee is these days?
I wouldn't know because I don't write them kind of checks.
$27.50.
Can you imagine that?
$27.50. Wow.
Yeah,
27 or 47?
$27.50 per check. So
47. 50.
27. He's saying.
27.50.
Yeah.
Okay. $30 for returning.
yeah,
Sorry?
essentially because the government some tax is like 40 cents, I think so. So you about $28.
Basically $30 for one stinking check. Is that criminal?
Absolutely.
Absolutely. Yet nobody's being arrested. I don't care what the explanation is. As a former banker myself, I get it. I know what the deal is. But for sending one piece of paper back, charging somebody $28, it's kind of like the Enron people. There has to be some level of unethical behavior involved. That's too high for sending one stinky piece of paper back because of insufficient funds. But financial institutions get away with it, not only here, all over the world. because bank run things. Did you know that? Everywhere. Wherever the bank goes, everything goes. Unfortunately. All right. And so they can get away with it. It doesn't mean that charging $28 to return one piece of paper is fair at all. Once upon a time, long time ago, when I was a youngster, it was $5 to return a check, the same check. And with all the technology, it can be returned faster, yet it costs more. Who has an explanation for that? Anyone in this class? No, we're all stuck. You don't like it? Jump off the Sydney Poitier Bridge and call it that. Nope, nothing you can do. All right. I'm just throwing it out there for you youngsters anyway, who are going to be coming up messing with this stuff. Imagine what a return check will be in 10 years. But then again, in 10 years, there won't be any checks, correct?
Yeah, it should be 2025 checks should be eradicated from our banking system.
My. Is that good or bad?
Is it good on my end? Because I mean that's work for me.
That means you work in the bank.
Yes, sir.
Okay. But what happens if you're no longer working there? Let's say one day they say to you, we don't need you anymore. Get the hell out.
One of the offshore banks would call.
I know, but the point is, you get the point. All right.
I get the point though, for sure. I get the point though. I get
understand what all this technological mumbo jumbo. I get it. The problem is when you start removing everything, what are the elderly going to do in terms of their banking affairs? Anybody knows the answer to that?
I mean, it's happening now, so I get attest to that. The elderly getting pretty much forced to online bank, but some of them pretty much not tech savvy as yet.
And they'll never be.
Yeah.
Some of them are still trying to spell rat because they never went to school.
That is true.
What are we going to do about them?
Yeah. Make sure they have honest and ethical grandchildren.
Grandchildren? You mean all the grandchildren who are leaving and going away in other countries? They won't have any grandchildren. All the Bahamians are going, aren't we? Is that a debit or credit?
That's a debit on our end.
Yeah, absolutely. I'm just using the accounting concepts to be the devil's advocate. Throw some stuff out there for you youngsters to think about. It's going to be an interesting time ahead. All right. So an account is usually somewhere where we lodge financial transactions, such as a bank account, such as a company asset account, such as a company liability account, such as a company's bonus equity account, and you'll see an account in 1 second flat. Because I know in your chapter you've seen something called the T account, right? I hope.
Yeah.
Yeah, the T account. The T account looks exactly like a T, doesn't it?
Yes, it
Yeah.
does. Exactly like a T.
Yeah, that's why we call it a T account. And the T account is equivalent to that same account that you have at the bank or at your office in your QuickBooks or in your manual ledger. It's the same thing. And the T account or the account, as we call it, we don't call it T account in the real way, we call it T account for practicing purposes students. But in the real way, we just say my account or the account. Okay? The account usually has 3 main components. One is the title of the account, the name. On this left-hand side, we have the debit, which is always on the left-hand side, always. And on the right-hand side, we have the credit side. Simple enough. But you have to remember where they are. Otherwise, you mix them up and then some other things get mixed up. Okay. So let's look at another.
Can you repeat the order again for me, please?
The T account. The
Yeah.
T account has 3 basic sections. One is the title or the name of the account sitting on the top of the T. Okay. And you'll see that many times soon. On the left-hand side of the account are all debit transactions. Always. We always debit on the left-hand side of the account. And then on the right-hand side of the account, we always credit on the right-hand side of the account. That's a rule. Doesn't never ever changes. Somebody tries to get you to change, decline to listen. The rule is debits are on the left, credits are on the right. Okay. All right. So by illustration, then, do you guys see a T account with $100,000 debit and $70,000 credit?
Yes,
Yes, we do.
Yes.
That's a typical cash account. How many debits are in the cash account?
2.
2.
Did we discuss in chapter 1 that debits increase assets?
I'm
No,
not quite sure.
no, we didn't go with that.
Sure.
I can't recall, but I know for sure I would remember it.
Yeah, you would think that that's something we would remember. I wonder.
Yes.
I wonder what we discussed in chapter 1. Anyway, seems to be a little vague, but that's okay because that's what review and study is all about. Takes you back, and after about chapter 3, I'm going to be assigning. Before chapter 3, I'm going to be assigning 1 or 2 problems anyway from chapters 1 and 2 when we're done, so you can kind of not lose track. That's the whole idea. Because after a while, you get so busy with the other stuff, you start saying, did we do the previous stuff? So you have to keep reviewing it, okay? Keep reviewing it. All right. So how many debit items are in this cash account?
2.
2. And what is the total of the debits in this account?
103,000.
3,000. How many credit items?
7. It's 3 credit items.
For a total of?
71,600.
Okay, so what's the balance in this account?
31,400 in a
Absolutely.
negative.
I'm so happy you said that so I can clear up something.
Because it's on the left.
It's only that way if it's in the bank.
Mm-hmm.
Anytime outside the bank, a debit balance is always positive. Okay, folks?
Okay, so in account, what you're saying is only if it's in the bank, it's in a negative.
Only if it's in the bank and it's a debit balance,
Mm-hmm.
it's considered to be overdrawn.
Okay.
But outside of the bank, in any other accounting environment, a debit to any asset such as cash increases that asset, and so therefore it is never overdrawn. It only becomes overdrawn when the what? The credits are what? Larger than the
Debits.
debit. In other words, you received $103,000. So remember when we receive an asset, we debit it. Okay, folks? I'm sure we discussed that debits increases and credits decrease. And didn't we do that song and dance?
I don't recall. I
Hmm.
don't recall in chapter 1 going over that.
You said debits decrease and credits increase, right?
Depending on the account. We didn't have that conversation?
So on the financial side, a credit is actually a credit and a debit is actually a debit then.
Outside of the bank?
Yeah, it'll be totally opposite then.
Yes.
Okay, thank you.
And the reason why it's opposite because the bank account is not an asset account.
Understand.
The bank account is a liability account. So
Okay.
it would have a credit balance as opposed to a debit balance. In the real world of accounting, assets are always debited, which is a positive number. Okay? Liabilities are always credited. And we'll see some more of that stuff as we go. But I can't believe, I thought we had that song and dance. I need indulge me for a moment. Let me just retrace my steps. I'm very curious about, because it's very important that you guys, okay, let's see. I thought I did that stuff. That's absolutely important. The rules of debits and credits. Can somebody go back to chapter 1 in your text and see if you see any rules on debits and credits? Because if they're not there, that's a major exclusion. I don't know why I'm so convinced. Go back to chapter 1 and see if there are any rules of debits and credits.
I don't remember seeing any when I went through chapter 1. Nothing specific to debits and credits. I actually went online and pulled up some stuff because I didn't see it in the book. I don't know if anyone else did.
Yeah. They actually don't have it. That is most unfortunate. The rules of debits and credits should be always in chapter 1, so students can get into that. Okay. But I'll kind of bring you up to scratch as we go. Let's moving right along. Let me just say this for the record, okay? Maybe you can make a note for the time being. Debits in accounting always increases assets and expenses. You have that? Debits increase assets and expenses. Credits increase liabilities and equity. Credits increase liabilities and equity. Okay. All right. Credits also increase revenues. Now, those are the rules of debits and credits fundamentally. You just need to learn them until it becomes second nature. After a while, you wouldn't have to be so conscious of them. You just let things rip automatically. So in our example with the T account, what does this debit do to this account? What do these debits do to this account? Increase it or decrease it?
It increases the asset.
Good. And what do credits do to this account?
It
It decreases, I
it
mean,
decreases the revenue. Yeah.
Yeah, it decreases the
Good.
cash account.
Mhm.
Okay. So in other words, if a debit increases an account, a credit will do what?
Decrease,
And so if a credit increases an account, a debit will do what?
decrease.
There you go. Okay, somebody's gotten the song and dance already. And once you start, when that dance becomes smooth, you'll just be flowing through this stuff and makes a world of sense. Okay, but it takes a little bit sometimes for students. So that 31,400, is that a positive or negative balance?
that's a positive.
It is. Okay, it absolutely is. Okay, keep that in mind. Moving right along, let's look at the accounting equation again. We said it's assets equals.
Liabilities plus owner's equity.
Okay, now look right under that and you'll see the rules that I was talking about. Okay, it's in chapter 2. You see it? Assets, liabilities, owner's equity, and then some stuff right underneath.
Yeah, we say it, page 45.
Okay, now these are the rules for assets. Debits for
You said debits are for credit, right?
well, if we look at the table of the chart that they gave us, it says debits for increases,
Mm-hmm.
credits for
Decreases,
Increases.
liabilities, debits for
decreases,
credits for,
increases,
Increases.
and for equity, debits for
decreases,
Increase.
credits for.
increases.
Now, if that sounds like a bunch of gobbledygook, that's okay. But you slowly learn the increases and decreases, and then it will become second nature. Okay? Don't
So-
worry about it, get it right away.
So the question is pretty much quite pretty much like a credit card in that case, because you use the credit, that means you're increasing your liability, right?
Yes.
Alright.
And then when you make a payment, what happens?
You
Increase your asset.
increase your asset of the credit card.
No,
Mhm.
when you use your credit card, you increase your liabilities.
Yes, yeah, you.
The
Yeah,
opposite of which, mhm.
So when you make a payment, what does that do to your liability?
You decrease,
Decreases it, decreases it.
With a what?
Correct? With a, I mean,
you decrease it with your revenue, eh?
Well, okay, let me put it another way. When
Yeah.
you use a credit card, you increase your liability,
Yes.
okay?
Right.
When you make a payment, you kind of like debiting your liability, aren't you?
Yes.
And when we debit a liability, what does it do? According to this table,
Decreases, your balance decreases.
It decreases.
Yeah.
there you go. So when you use your credit card, you increase your liability. When you make a payment, you're actually debiting your liability in essence. It's because you are decreasing your credit card payment. Okay?
Yeah.
Mhm.
Absolutely. All right. But don't worry, it'll come eventually before you know it. It'll be second nature. Okay? Debits increases assets. Credits decreases assets. We saw that. Credits increase liabilities and known as equity. Debits decrease liabilities and known as equity. It's a song and dance. And like everything else, in order to be good at it, you have to practice. Nobody becomes a good dancer after the first dance. True or false?
True.
True. So this is your first dance. Don't worry if you're stepping on your own toes. That's to be expected. Okay. All right. What does your text say about normal balances? Anybody sees that? Normal balances.
It's
Yeah.
you. Go ahead.
No, you go ahead.
The normal balance of an account is its usual balance, and it is the side that increases the account.
Okay. So they kind of put it very simply there. It is the usual balance, and it's the side, debit or credit, that increases the account. So what do you think the normal balance would be for an asset? Debit or credit?
Debit.
Yes. Doggone it, it's coming slowly but surely. What do you think the normal balance would be for liability?
Credit.
Credit, yes. And what do you think the normal balance would be for equity?
Credit.
Absolutely. My. It's kicking in sooner than expected. Okay. Let me throw another one out there. What do you think the normal balance would be for revenues?
Credit.
Credit.
Credit, yes, credit. Very good. What about the normal balance for expenses?
Debit.
Debit.
Absolutely. So now you guys are definitely on the right track. So I can happily move down to where we're getting soon to the actual transactions, and then you get to practice the real life stuff. I hope they have this figure 2.2 that I have in my text, probably called something different in yours, about the relationship of owner's equity. Do you guys have that? Nice little diagram showing the accounting equation and the owner's equity account, no?
Yeah, page 46.
Yeah, okay. For example, it starts off with the balance sheet, right?
Yes.
And then you have the accounting equation, which is assets equal
Liabilities.
plus.
Owner's
owner's
equity.
equity.
Absolutely. See, it keeps coming up. It keeps coming up, and it'll keep coming up until thy kingdom come. All right. So the arrows, there are 3 arrows going to owner's equity. Which 3?
Owner's capital, withdrawals,
Withdrawal.
and revenues and expenses.
Expenses.
Yeah, revenue and expenses. Now, eventually you'll see that revenues and expenses will cancel themselves out. We'll net them out. But for now, we just kind of add revenues to equity and subtract expenses from it. Later on, we'll show a net figure, and just the net figure will go. In other words, the net figure will be a profit or loss, and just we show one number going to equity. All right. So we have owner's capital, which is the investment in the company. Anybody remembers what withdrawals are? What are withdrawals?
Monies that the owner take out of the business,
Yeah, for personal use.
personal use.
Any money that is used for business use, what do we call that?
Expense.
Absolutely. Man, we on a roll. Okay, you guys are making my life considerably easier. Because sometimes students take a while to get it. You know what? Let's go back to chapter 1 and start in the middle, because they just don't get this debit credit thing right away sometimes. Okay? Do you guys have something called study note?
No, I don't see that.
And they left off all the good stuff. They only left stop and apply. But that's okay. Stop and apply is good. Make sure when you come to stop and apply, you stop and apply. Okay. Is there a stop and apply for this example we're looking at?
Mm, mm.
Yeah, apply it. Yeah, it has the equations on page 47.
Yeah. What amount is sitting in the cash balance, cash account?
625.
$5.
How much?
$625.
Yeah, 625. Debit or credit?
Debit,
How do you know it's debit?
because it's on the left-hand side of the T account.
I see you guys know how to learn and apply rules. That's good. Because once you apply the rules, you cannot go wrong. See my point? All right. Any money sitting in accounts payable?
Yeah, 200
200. Debit or credit?
credit
Okay,
How do you know?
on the right.
on the right.
Sorry.
Yeah, the right-hand side of the account. All you have to do is apply the rules and you can't go wrong. Any money in the capital or investment account?
400.
100
Debit or credit?
credit.
Credit.
Did the owner withdraw any money for personal use?
Yes, 75.
75.
Thank God it's only 75, okay? Because when you take money out for personal use, then you're using the money you need for company use, correct?
Mhm.
Yeah, so if you need to buy products and pay staff and pay your bills, and you keep taking out for your personal use, what's gonna happen? Soon you wouldn't have
And then,
enough, yeah, soon you wouldn't have enough to pay your company expenses, like salaries. And then you have a ride on your hand, they might find you with your head bashed in because people want their
Money.
money. Yes. All right. Did this company generate any revenues?
yes, $250.
$250, debit or credit?
Credit.
Right.
What's the normal balance or revenue account?
It's
The side that
the amount
increases
that's
the
on
account.
credit. Yeah,
The normal balance or revenue account is credit.
it's a
Yeah.
credit. Yeah,
And what's the normal balance for an expense account?
Debit.
debit.
Any expenses in this transaction?
Yeah, wages 150.
Yeah, wage expense. That to pay salaries, $150. All right. So using the accounting equation, is this equation in balance?
Yeah,
Well, if we add liabilities and capital, what do we get?
Capital 600, is it?
600, yeah. And then if we add revenues to that, what do we get? Because revenues increase capital.
Right, so then you'll get 850.
850. Withdrawals and expenses decrease capital. So what do we have left after we take them away?
$625.
Which is equal to
your cash,
Yep,
Your assets.
your asset. Mhm.
Yeah, in this case, you only have one asset at the moment. So is your accounting equation in balance?
Yeah,
yes, 625.
Yes, absolutely. Okay. It's important to be able to learn and understand those steps because these elements that we're looking at form the elements in the balance sheet. And if you don't understand the debits and credits of it, what is to be added and subtracted, your balance sheet later on will never balance. That's why some people in the real world, their balance sheets don't balance because they pass incorrect debits and credits at the journal entry stage, which we'll see soon. And like a computer, garbage in means what?
Garbage out.
Absolutely. Nothing has changed. Garbage in means garbage out. All right. Now we get into the business transaction analysis. We did all of that preparation. You know, like when you're an athlete and you're going to run the 100-yard dash to a pole, you have to warm up. All that stuff was the warm up to take you now to the actual business transaction analysis so you can understand what's going on. Without that warm up session, you'd be in big trouble. Okay? What do we begin with? We begin with a piece of paper called a source document. The source document is like a what, anyone? Example,
Invoice.
invoice, of course. If you sell buy a piece of property, what would be a source document?
Deeds.
Yeah, the deed. Would there be a bill of sale involved there?
No.
No? How are you gonna get paid? Or how are you gonna pay? A bill of sale is just a document saying, I agree to pay you and you agree to receive this X amount. So you should have a bill of sale. The deeds only come to you after you do what?
Purchase.
Yeah, after you pay, absolutely. Until then, you will get no deeds, for sure. Right, so the source document is a very important document. Okay. Notice the example that we have of a journal entry. Does everybody see the example of a journal entry?
Yes, sir.
Good, because it has a date to the left-hand side, a debit to the left-hand side of the margin. The credit is always indented. And as you can see, the amounts are sitting in a very peculiar way, not one under the other. Does everybody see that? Good.
Yeah.
Because every time you do a journal entry, it should look like this one, not your own version. Now, if you put your own version and you put them in the right place, the right debit, right credits, and the date, the right names, just that you don't line it up this way, it'll still be correct. But it will tell accountants that you didn't go through the process that accountants go through. Because if you're a real accountant, it will always look like this one. Okay, for sure. All right. Speaking about real accountants, why is it that they don't have any short models? Anybody knows why? Why aren't there any short models? Ladies? Am I the only one who thought about that in the whole wide world?
Could be.
That's funny.
we have
Okay.
a few short models. They
There are short-
consider not average, but they're models, evil.
Okay. Cool. Because generally, like, you don't see any models like under 5 feet, do you? I wondered for decades, like, how come? Are they discriminating against them? Danielle, are you there yet? Nothing yet from Danielle. Crystal, are you there yet?
Sorry,
Crystal, are you there?
I'm here.
Okay, great. When I took my register earlier, I didn't have you on my list, but you're here.
Okay, I'm here. I've been here.
Okay, wonderful. Danielle hasn't answered yet, so that means she must be somewhere in the jungle still. Denise, are you here? Okay, Danielle and Denise. All right.
I'm here, sir.
Oh, you're there.
Yes, sir.
Denise, is it?
Yes, sir.
Okay, wonderful. That only leaves Danielle somewhere in the jungle. All right, fantastic. Okay, so let's go to the beginning of this whole transactional analysis issue. We start off with the owner's investment to form the business. Everybody sees that?
Yes.
All right,
Mhm.
I'm gonna walk you through it step by step, because once we come out of chapter 2, the honest on remembering, reviewing it, reminding yourself how it works will be on you. Okay, but it's important that you see the initial steps as clearly as possible. What happened on July the 1st? Well, here's what I'm going to do. I'm going to call a name, and then for each transaction, that person will walk us through. That way, everybody will get an opportunity, hopefully, to get involved in the transaction analysis. All right, so we start at the top. Vanessa, are you there?
I'm here.
Okay, Vanessa, what happened on July 1?
June Blue invested $40,000 in cash to form Blue Design Studio.
Absolutely. So $40,000 in cash was invested to form the studio. What's the analysis, Vanessa?
Sorry, so the 40,000 was put on the debit side. And the date, sorry, the month and the day is on the same line as the cash.
Yeah, basically, she's acknowledged that the cash was cash debited or credited?
Credited.
The cash was credited?
Sorry, debited, sorry.
Okay, it does look a little funny at the beginning. Trust me on that one.
Yeah,
Cash was
debited.
how much?
So 40,000.
40,000 investment.
Right.
Is the transaction complete with the debiting of cash?
Yes.
Well, remember, in accounting, we have the double entry system. You always have to have a debit and always have to have a credit.
A credit, right.
Debit cash for 40,000, we have to have a credit. In this case, what did we credit? If you look at the journal entry, you'll see.
Oh, sorry, I thought my mic was on. 40,000.
What did you credit? Which account?
The owner's equity.
Indeed. And remember, the owner's equity account represents the investment in the business. All right?
Yeah.
Now, going forward, when we seek to analyze a transaction, you always start with the green box, which is the journal entry. Every transaction must first go into the general journal, which is what that green box is. And in that green box, you'll see we have a date, we have a debit, we have a credit, and we have an amount. That should always be your first transaction. Once that transaction, once that journal entry is complete, then we go to the blue box, which is the T account. And we will post each transaction to the account. Somebody see that?
No, I don't see that.
Yeah, our book is a bit different.
You guys don't have a posting after the journal entry?
Yeah, I think the T account is first, and then
Yeah, the T
the
first,
journal
then the
entry is
journal.
second, yeah.
Right.
It's what it's saying. It's a blue box with the T account.
Yeah,
Yeah, that's fine. For each transaction, you go to the green box first where the journal entry is. That's the one that must always be done first, the journal entry.
Okay,
Once
so
you-
that's the yellow box first.
right, yellow.
That's fine. Once you do journal entry, then you go and you post each one to the individual account. Everybody see that?
Yeah.
So cash is posted as a debit to the cash account,
Mm-hmm.
and the owner's capital is posted as a credit to the capital account. Correct?
Also,
Okay. What is the comment, Vanessa?
If John Blue had invested assets other than cash in the business, the debit would be classified as the appropriate asset accounts, for example, equipment.
That's the comment they made?
Yes, sir.
Interesting. Okay, so yeah, if something else had gone into the investment other than cash, then whatever that is, such as equipment, would also be added to the asset side, but it will have its own account, correct? Let's say she had invested 40,000 in cash and 10,000 in equipment. Then the entire investment would be how much?
I'm sorry, can you repeat that?
50,000. 50,000, eh?
Yeah, $50,000, 40,000 in cash, 10,000 in equipment. So instead of just having the cash account for 40,000, you have that along with another account called equipment with 10,000 sitting on the debit side. Does everybody see that? That's how the whole accounting process works. All right. What about this issue about an economic event? An economic event that is not a business transaction. What could that possibly be? What do they say it is?
Orders of office supplies for $5,200.
Why is that not a business transaction?
Because it supplies for the office.
Well, that's okay, but why is it not a transaction for accounting purposes?
Because they haven't received it yet.
So, yes.
Remember what we said earlier?
No
No title.
Right, right.
As you have title, you cannot record it.
Record it, right.
Some people actually argue, but we ordered it. So somebody could cancel the order, true?
Mm-hmm.
So if you go and record it on the order and it goes into the records and it's canceled, so nobody might remember to take it out the records. You follow?
Yes, sir.
Yeah. All right. So if there's no change of title, the rule applies. We cannot record it. All right. Transaction number 3. So transaction number 1 was an initial investment. Transaction number 2 was actually never a transaction. How about that? Transaction number 3 goes to my next victim, and that is Hadis. Are you still there?
Yes, I'm here.
Okay, Hadis. What's the transaction on July the 3rd? What happened?
So on July the 3rd, Joan rents an office for Blue Lagoon Studio. She pays $3,200 for 2 months rent in advance. So it says here, prepaid rent in advance is considered an asset. So basically what we did is we debit the prepaid rent account on July 3rd for $3,200.
Okay.
And obviously we would credit the cash account because that would decrease the revenue. So we would credit the cash account to balance that.
Well, actually, the credit to cash, it decreases cash itself.
Correct.
Okay, very good, not bad. And then the transaction is posted how?
It's posted in a double entry. So it's the asset, it's cash. So yeah.
Well, not cash in this case.
Mm-hmm.
The asset in this case is not cash. Remember, what is it?
The asset in this case is not cash, it's prepaid rent. Sorry, I'm looking at the wrong thing. The asset in this case is the prepaid rent, 2 months.
Okay,
Mm-hmm. So when we post it, pardon me?
asset is prepaid rent, debit or credit.
The prepaid rent debit.
Okay,
And the cash, if we will credit the cash.
okay. How do you post it?
When you say, how do I post it, what you mean?
Do you see the T accounts where it is posted?
Oh, that's what you mean. Okay, so when you post it, you would post it on the credit side of the T cash account. And then on the prepaid rent T account, you'll debit it July 3rd, 3,200.
Okay, very good. We're getting better by the minute. After this transaction, what's the balance in the prepaid account?
Okay, now, Mr. Wilkinson. So after, I'm gonna tell you right now,
After this transaction, what's the balance in the prepaid account?
is it 36,800?
No?
So how do I calculate?
Well, when you open your prepaid rent account, before you did the posting, how much was in there?
So will that be 43,200?
No, how much was prepaid rent?
Prepaid rent was
3,200. 3,200 was prepaid rent.
So before you posted it from the journal, what was the balance in prepaid rent before the posting?
Zero.
Zero.
Yeah.
Sorry, did you know that zero is a number?
Huh.
I know we don't like zero, but zero is a number. It had $0 in it. Now,
Yeah, I got what you're saying.
now when this transaction occurs and you debit prepaid rent for 3,200, so now you post that 3,200 to the prepaid rent account, which makes the balance in prepaid rent after that posting.
3,200.
Yeah, 3,200.
3,200. Yeah, I follow. Yes, sir.
All right. Now, what's the balance in the cash account after that transaction?
That is what would decrease.
That's where, yeah.
Take 3,200 minus 40 grand. Hurt my calculator.
Somebody was bold enough to see that word calculator. That's good. Because you need a calculator for every single accounting class until the class is finished.
That'll be 36,800.
How much?
36,800, sorry.
Yeah, that's what I told you.
That's exactly what I believe someone said earlier.
Yeah, but you said that for the prepaid account.
Yeah, I said the opposite. Yeah, but I get you now. I get you now. I following you, son.
Okay, fantastic.
Got you. I got you.
You're getting the hang of how this thing works.
Yes, sir.
What's the normal balance for cash? Debit or credit?
Debit.
Debit. Debit.
Yes. Yes, yes. All right. Thank you very much, Elise. Let's see who my next victim is going to be. Clinton, are you there?
I'm here.
Okay, Clinton, you are now going to purchase an asset on credit, not cash this time. On credit. When did this transaction occur?
This transaction occurred on July 5th.
And what was the information given for this transaction?
Okay. The information to this one was an office supplies order on July 2nd, an invoice of $5,200.
Okay, so you purchased some order of office supplies?
Yes, sir.
5,200. All right, what's the journal entry for that transaction?
Okay, the journal entry for the transaction will be, it'll be a credit, you'll be adding 5,200 to the credit because pretty much you'll be, this is, what they call it, accounts receivable? For that.
Well, no, we don't, we haven't.
Sorry, accounts payable, sorry.
Okay, debit or credit?
It'll be a credit of 5,200 added to liabilities, accounts payable.
Okay,
And, pardon me?
go ahead. So far, so good.
You'll be debiting the cash office supply, assets for office supplies.
Yeah, the asset office supplies for,
You're debiting 5,200 for the office supplies, and you put it towards the credit, which is the liabilities that you're paying for the supplies. So you increase the asset account, office supplies with a debit, and you increase the liability account payable with a credit.
how much?
5,200.
Hey, couldn't put it better myself. We increase an asset account, we increase the liability account. Why do we have a liability?
Because we still have to pay the company for the actual sort of the supplies we got.
Yeah, what language in the transaction says that it's liability? Which language we use? We put,
Accounts payable.
Accounts payable with credit.
yeah, but what word tells us that it's an accounts payable, but it's a liability?
1 second.
Go back to the heading of the transaction, purchase of an asset on
Payable.
Yeah, purchase of an credit.
Credit.
credit. Anybody in this room ever had credit before?
I mean, the credit card. I feel like the same thing would be with a credit card actually.
Well,
So
a credit card is also a liability, isn't it?
yes, sir.
Okay, so anything, here's the difference. Does anybody know the difference between cash and credit?
Yeah. Cash and
No.
credit.
What's the difference between cash and credit?
One is tangible, one is intangible.
One is what you, cash is what you own and credit is what you owe.
Yes.
Yeah, but also cash is what you pay now. Credit is what you pay when?
Later.
Later.
Mhm.
Whenever we pay something later, it's a liability. Okay, folks? And in
Yes, sir.
accounting, we call a liability a payable. Because payable means what? Payable. You have to pay it when? Later.
When
When
you're
you're
able.
able.
She finally got it. That's the connection. You pay a bill later because you bought it on credit. Okay? We love to get credit, don't we? But we don't like to what? Pay it back. Paying things back is painful. We just like to receive the asset, run off, and our liabilities, we like to let them sit until thy kingdom come if we could, rather than pay them back. Which is why a lot of Bahamians end up in trouble because of the refusal to repay their debts. Okay, that's not any of you guys, I hope, but a whole lot of Bahamians and people around the world do not like to pay their debts. They love to get things on credit, but they do not want to pay the debt every month when the time comes. Okay? All right, fantastic, Clinton. Let's see who's next.
Thank you.
Mario.
Is this for the purchase of an asset partly in cash? Yes, it is. Okay, so on June 6th, Joan purchases office equipment totaling $16,320 for Blue Design Studio. Joan pays $13,320 cash and agrees to pay the rest next month. Which means seeing that before I turn the page, seeing that Joan purchases office equipment, we gotta need an account for office equipment. That's going to increase by $16,320. And then because Joan pays a portion of that, is 13,320 credit cash, or decreased cash by $13,320. And then whatever the rest of that is, I don't know if I calculator, but don't really calculate it. Whatever the rest of that is, we increase accounts payable by crediting accounts payable. No, by debiting accounts payable. Liabilities are increased by credit. So we credit accounts payable by the remaining value. I flip the page.
Thank you very much. That's exactly what we do.
Yes, that's what it looks like. Yes.
All right. So yeah, that's exactly what we do. And even as you get started, try and practice the language as much as you could, because it's very unique to the profession. For example, we say things like this. On July the 6th, we debit office equipment for $16,320. We credit cash for $13,320, and we credit accounts payable for $1,000. That's kind of how we lovingly say it in accounting. So everybody in accounting understands. Okay. Once you do your journal entry, see, every transaction is followed by a what?
Journal entry.
Journal entry. I cannot emphasize it enough. If you forget and egg things up, it's because you decided to forget. Every transaction is followed by a journal entry. Every transaction must have a source document to prove the transaction occurred. See, these are the things we learn. What is the posting for this transaction?
A compound entry.
Yeah, it's a compound entry. And how do we post it?
What exactly do you mean by post? You mean log it in the journal entry?
Oh yeah, here's how we post.
You mean to the account?
Yeah, posting means going to the accounts. That's what posting always means.
Okay, so we have the equation, assets equals liabilities plus funds equity. In this case, we're dealing with the asset of cash, as well as office equipment and the liabilities of accounts payable. So seeing that cash was initially 40,000, you decreased it for $3,200 for some reason. And
before we decrease it, what you need to do is post each transaction in the journal entry first. You have to say, for example, the account office equipment is debited for $6,320. You follow?
Okay, I do. So because it was credited for 13,320.
Yes.
And then accounts payable was credited for $3,000 exactly.
Absolutely. You guys are beginning to sound like professionals already. All right. After this transaction on July the 6th, what was the balance in the office equipment account in the T account?
16,320.
Good. What was the balance in the cash account?
Whoa. I feel like I missed one. Hold on. 40 grand, take it 3,200, take a little 13,200, which brings us to 23,600.
There you go. So you notice the asset keeps going down because other transactions are using money, but the cash is going down, but other assets are going up, like you now have new office equipment to do the work and start to make some money. That's how it works. Okay. What are the total liabilities after this transaction?
I want to do a little bit. $8,200.
$8,200. If anybody is stuck or don't understand it, please feel free to jump in and say, I don't get that. Okay? If you don't say that, I will assume that basically you're understanding these transactions. All right, way to go, Mario. Thank you very much. Okay, let's see who's next in our transaction analysis. Mario's had his run. Daniel, are you there? Daniel's gone off to have a martini somewhere. Okay, while we wait for Daniel to come back, we'll find a pinch hitter. Crystal,
Yes, sir.
okay. Crystal, your job is to pay off the liability. What journal entry would you make given the example you see in your text? Remember, you have to use the language of accounting. Okay. Anybody not familiar with Barry White?
No, I don't sound like Barry White.
You guys don't know Barry White? Wow, I can't believe I'm that old. Barry White.
No, I was away from my mic. That's the boy who was like, you know, make the hits. The olden boy. Not the olden boy. It's actually calling you old. Sorry, not sorry, but the guy who created some hits, the music hits.
Yeah, he was.
Yes?
He was like he sang love songs like ballads. Okay, and people used to refer to his songs as the music of love, Barry White, because he had this voice like, yeah, I love you, stuff like that. And so back in the day, the youngsters of the day, which would be my generation, everybody was like a little crazy, like, yeah, let's start dancing and snuggling and sing dancing Barry White. Okay. So let's see more. You are paying off a liability. What is the journal entry that you will make?
Okay, so we're going to debit the accounts payable for 2,600
Okay.
and credit cash for 2,600.
Of course. Why do we debit accounts payable? Well, first of all, is accounts payable a liability?
It is.
Okay. What is the normal balance for liability?
A credit.
And therefore, if we're going to reduce a liability, we must
increase the asset.
No.
Or if we reduce the liability, you said.
How do we reduce the liability?
By debiting it?
Absolutely.
Yeah.
For example, if you get a bank loan for a car for $20,000, that's a liability, correct?
Right.
If you pay the bank $10,000 back, will you debit or credit that account?
Credit.
If you credit, you will increase it to 30,000.
I'm paying it back, right?
Yes.
So debit.
Yeah, if you're paying it back, you debit the account. And now once you debit the account for that payment, what is the new balance in your car account?
Sorry, you lost me after.
Okay, let's say you have a vehicle account where you buy a car for $20,000. So you credit, well, not buy a car, you get a loan for $20,000. And so you have a liability for the car for $20,000.
Mm-hmm.
You get your ASU drawer the month later, and you go in and you put $10,000 on it. Will you debit that account?
Okay.
Which one? Will you debit it or credit it?
If I got my ASU?
You make a payment of $10,000 on the account.
Okay, so then I am debiting the account?
Absolutely. After you debit the account, how much do you owe the bank?
10,000.
That's how it works for liabilities. So we're debiting accounts payable because you're what? Reducing it. Okay?
Yeah.
Yeah. And we're crediting cash because?
cash, we are increasing that.
Are we increasing cash? Anyone?
No,
Oh, no,
we
sorry, we're
decreasing the
decreasing
cash.
it. Yeah, we're decreasing it. Yes,
Absolutely.
because we are increasing accounts payable. Okay,
It takes a little while to get into the groove. That's okay. Whenever cash is increased, we debit it. Whenever cash is decreased, we credit it.
credit.
Absolutely. Don't worry. Don't worry about it. Just keep making those moves. Before you know it, you'll be as smooth as you can ever imagine, Crystal. All right. But you step on some toes first until you get it. And then you're like, man, this is a piece of cake. Let's dance all. Nice. All right. So after debiting the accounts payable account for $2,600, what is the balance of accounts payable? Once the posting is done.
We have here. Account payable of 5,200 plus the 3,000, so that's 8,200
Right.
minus the 26, right?
Yeah.
Which will give us the 5,600.
Okay. Debit or credit?
The balance.
Yeah.
That's a good question. Credit?
Yes. Do you know why you said credit?
Because accounts payable, so.
Yeah, because it's an accounts payable balance. And
Right.
also normally the balance would be or take the side of the larger amount on whichever side it's on. Okay?
That's the normal balance, right, which is the credit.
Yes, absolutely. Absolutely. Okay, not bad at all. Not bad at all. What is the cash balance after that transaction?
Okay, let me
Our
see.
cash is going down and down and down by each transaction. Just like when you get paid, you're paying bills.
Right. This is where I get confused here in terms of when we were adding earlier with the T accounts from the previous transactions. I think the balance on the 6 was 23,600. So am I factoring that in, or I'm just going based on this date?
Well, yeah. Well, remember what was the amount of the first credit to cash?
40,000.
Credit to cash.
Credit to cash. We have 3,200.
What was the second credit to cash?
13,320.
And this one that you did?
This is the 26.
So what are the total credits coming out of cash?
So it's 19,120.
Uh-huh. And then how do you determine what your cash balance is? Just like your checkbook.
Okay, so am I going based on the 23,600 or the 40,000? That's
no, what you're doing is you're picking up all the cash that you paid so far and subtract it from the 40,000 that was deposited.
okay.
Yes.
Okay. Because I was trying to
I know.
yeah. 20,880.
20,880. Great.
Right.
Fantastic. Okay, fantastic. All right, thank you very much. Very good. So now this company is going to generate some revenue and cash. Finally, they're going to make money. Blaine, are you there?
I'm here.
Okay, Blaine. Now you can make some money on July the 10th, our Independence Day, when you shouldn't have been working, you're making money. What is the transaction that occurred on that day?
On July 10, Blue Design City performs a service fund investment advisor by designing a series of brochures and collects a 2,800 fee in cash.
Okay, so all of your money you got in cash. But
Right.
sometimes you don't get all in cash. Sometimes they promise to pay you some later, which creates a receivable. But in this case, you got lucky on the Independence holiday. For some reason, they decided to pay you all of the transaction in cash. All right.
Right.
And Blaine, what is your journal entry?
By journal entry, increases the asset account cash with a debit,
Okay.
and then increases the owner's equity account design revenue with a credit.
Thank you very much, because revenues always increase equity. Way to go. Now let's post them.
So we would put our 2,800 in a debit under the cash side, under the T account.
Yes, just as they have it.
And we would put our 2,800 in credit under the design revenue.
Okay, which is a new account we open up, right?
Right.
Because we didn't have a design revenue account until this transaction happened.
Right.
So in accounting, you don't open up any accounts until something happens. Once it happens, then you can open it up and keep it until thy kingdom come. How's that? All right. After this transaction, Blaine, what is the balance of your revenue account?
And, new account. That will be the 2,800.
Yes. And what is the balance of your cash account?
That would be 42,800.
42,000?
800.
Well, can somebody say where she read off? She said the balance of the cash account is 42,800. Is she correct?
No, you have to factor in
No.
your other
She
side,
take the credits.
the
Subtract it,
credit,
yeah.
and then minus, right?
Yeah, whenever you're balancing an account, cash or otherwise, you have to take into account the impact of both the debits and the credits. So first of all, you have to find out how much money came into your account, and you said it, 42.8. But how much money went out, Blaine?
19,120.
Okay, and therefore, how much money is left?
Is that right now? Hold on, I think right now. Minus 23,680.
Everybody agrees with her on that? Is her math working?
Yes.
No, I get
No.
28,880.
Yes, she's correct.
She's correct.
Yeah, 23,680.
23,680 is correct.
23,680. Okay, way to go. That's the other thing with accounting. You have to double check, because sometimes you think you put in a number, you put in the other number, you swear you saw the 5, it was a 6, you swore it was an 8, it was a 9. All kinds of weird stuff happens, so you have to always double check to make sure that your answers are correct. Just as in the real world, double check. Some
Sorry.
people,
Sorry, can you go over how you got that total, please? I think I miscalculated.
you mean,
The 23,880.
okay, here's what you do. What is the total amount of cash in your cash account?
You're talking about the 40,000 plus the 2,800?
Uh-huh.
Uh-huh.
Which is a total of?
42,800.
Okay. And what is the total amount of cash paid out and credits?
That's the 3,200, the 13,320, and the 2,600.
Yes.
So I just subtract that from the 42,800.
You mean the total?
Sorry, right.
Yeah. And what do you get?
One second.
I love it when people are calculating stuff.
Okay, so right, I get the 23,680. Okay, I understand now.
Okay, excellent, excellent. And
Right.
and I'm happy you stopped the Titanic in its tracks to get that cleared up early. So later on, you're not stuck on that late at night trying to do a homework problem or something, or worse still, an exam. Then you think,
Yeah.
I should have doggone asked about that. Okay, way to go. Don't be stuck. And don't worry about what people think. Whatever they think, too bad. All you know is you need to be what? Unstuck. How's that? Way to go. Okay, Hervanique, are you there? Hervan,
On credit,
yeah, revenue on credit. Remember the first revenue was in what? The first revenue you earned was in what?
cash,
Cash. But this time, somebody came to you with a sad story and said they want it on credit.
mhm.
What is the nature of the transaction, Hervanique?
So on July 15th, $9,600 was credited.
Well, what was the actual transaction? Before we
Okay,
get to the journal entry.
on July 15th, Blue Design Studio performs a service for a department store by designing a TV commercial. The company bills for the $9,600 fee now, but will collect it later.
There you go. So you perform a service,
Mhm.
you gave an invoice. They wanted to do it on credit. They promised to pay you later. So you do the work now, they promise to pay you later. I hope to God you get paid. However, in accounting, we have to record the transaction anyway. So what would be your journal entry, Veronique?
So the asset account, the accounts receivable, it will increase
Yes, by how much?
by $9,600.
Yes,
And the owner's equity account, the design revenue will increase
by how much?
9,600.
Yes. What rule of accounting are we using for this journal entry?
Double entry.
Doggone it, it's working. All right.
I have a quick question.
Yeah.
Would this be considered unearned revenue if they paid us in advance and then we owe them the work?
We'll see in the next transaction if that
Right.
is indeed.
Okay.
Okay.
Alrighty.
All right. In the meantime, we're trying to get her Veronique out of this mess. I don't know why she gave somebody credit, but she must be sorry for them. And so you can pay me a whole 9,600 later. She must know this customer very well. Okay. So where do you post these transactions, Veronique?
So the $9,600 will be debited for accounts receivable
Yes.
and will be credited for the revenue because I didn't get paid yet.
Correct. Notice something in accounting. Whether you get paid or not, you still record the revenue. Okay, folks? Does everybody get that?
Mhm.
Yes, sir.
In accounting, once you give credit, you don't have to get cash. Once the transaction occurs, whether you got cash or not, you still have to record the revenue, period. That's a rule. Please, when you're doing your practice session, your homework assignments that I will be sending you, make sure you follow the format for the journal entries and the format for the posting. Okay, don't do all kinds of rickety stuff. Follow the text. Don't be afraid to follow the text. It's there for you to use as a guideline. So when you're doing analyzing transactions, you can do some nice, clean journal entries that look like the ones in the text, and some nice, clean postings to your accounts. Not all kinds of scribbly stuff with a half dead looking T account and another jaundiced T account. No. Okay, try to set them up as neatly as they are in your text. Because accounting is as much substance as it is, as much it is form as it is substance. So it has to look good as well. All right. So who's next? Okay, got to the bottom of this already. Vanessa. He called me again. Vanessa, are you there? The one transaction is enough. Okay. Hadith, we're back to you again already.
Yes, sir.
Okay. I know you said, my God, me already.
I know, right?
Okay. So now
Very.
we are on the transaction called revenue collected in advance. You see it?
Oh. Mm-hmm.
Now, I think it was it Mario or who raised that question before?
It
Yeah,
was
I think
I.
it was Mario.
Yeah. So Mario
Sorry,
wanted,
let Mario answer.
yeah, Mario, since you asked it, you got these,
Okay.
I'll come back to you.
Right, that's it.
Fair enough.
So notice Mario, Chick's always ready to put you on the spot.
Listen, once it's a woman and not a mini skirt, you know?
Yeah, doggone mini skirt boy. tell you.
Okay, so
By the way, Mario, just for your information while I remember, there's only one way to defeat the mini skirt. Do you want to know the secret?
please enlighten me. So
Because mini skirts are a little spooky, especially I was about, I was about to say for young men, but it's spooky for older men too. In fact, it's even spooky for old guys in nursing homes. Even if you walk past
dread.
a nursing home, a guy who can't walk will try and get up for some strange reason instead of just sitting back and continuing his watching of Netflix. There's something about that that does crazy stuff. Anyway, the secret, Mario, and who else is there? The other guy.
Clinton.
Yeah, Clinton. The secret to the mini skirt is 7 is as soon as you see it, flee,
You say flee?
run. That's the only secret. If you don't do that, you're gonna lost the battle. The only way to win is to run. How's that?
I think you should ask the ladies if they agree.
Ladies, is that true or not? Flee. Let's see if any of our ladies are bold enough to answer. Ladies, secret to the mini dress for guys is to flee. How's that? True or false?
Ah, boy, they don't answer that one.
Well, the problem is, guys, if you flee, that runs counterproductive to the mini thing. She don't want you to flee. She wants you to admire, and that's okay. Nothing wrong with that. I'm just saying, if you can admire, but if you wish to like overcome, you have to run, or else you're gonna get stuck.
So if we flee in this case, would this be a double entry of some sort of credit?
Well, the problem is you can't flee from this one.
Dread.
Right? But the minute you could flee, if you have the strength. Most guys don't have the strength. We just get stuck. We have to just go over and say, you know what? You look so bloody vivacious in that thing. And then we stop.
Did you
Okay.
say vivacious?
Vivacious.
Vivacious. That's a new one.
Yeah, vivacious. That it comes from the Latin word vivo, which means lively and alive. See? That's
Wow.
Okay.
I'm surprised you didn't say tantalizing.
I don't want to go there. Then we may not
Okay.
even get past this revenue collected in advance.
Okay. So on July 19th, Blue Designs. Go ahead. Okay. On July 19th, Blue Designs accepts $1,400 in advance as a deposit on a series of brochures to be designed. In this case, this is where we have to unearn revenue because basically they paid in advance and we didn't do the work yet.
Correct. So what account do you debit?
We debit the cash because they gave us some money, and then we credit the liability of unearned revenue because we owe them the work.
Absolutely. Thank you. Gracias. Merci beaucoup. All right. We credit the liability account unearned revenue because we have not yet earned it. Okay. For how much?
For $1,400.
And then, as usual, you go ahead and post the transactions to the individual accounts.
Yes, which means cash. Pause. So like,
Question?
okay, yeah. So assuming that the cash balance is not 40,000 plus 2,800, whatever that is. Let me see. This plus this. Ooh. Plus this. Assuming that the cash balance is not 44,200, how do we like follow to see what the balance is? Do we do the 400, then take away do we do the 400 on the first, then take away the 3,200 on the third, and then take away another 13,320 on the sixth, and then take away another 2,600 on the ninth, and then add the 2,800 on the 10th, and then add the 1,400 on the 19th?
Well, you can do that if you have time to play. But basically, in accounting, transactions are recorded and posted in a chronological order. What is the chronological order? On the dates on which they occur. Do you follow?
Mm-hmm.
So you could do all that stuff if you want to play around with different ways to balance the cash account. But the cash account, like any other account, should show the day that each transaction occurred and the amount.
Which means the balance would be there immediately when you go to look at it.
Absolutely, especially with computerized accounting, balance, as soon as you put in the transaction, you have a new balance.
Okay.
We're only doing this stuff the way we're doing it because we're using the manual system.
Mm-hmm.
Okay, so we're adding up all the debits and all the credits because we are not, this is not computerized. This is for learning purposes. But in the computer, as soon as you put it in, the balance is changed.
Agreed.
Okay, and so you'll be able to see a new balance every single time immediately. For this one, we have to add up everything and then subtract one from the other because this is manual.
Mm-hmm.
So yeah. All right. So what's the balance in the unearned revenue account?
In the unearned revenue account, the balance is 1,400.
Is that an asset or liability?
That is a liability because we owe them.
What do you owe?
Some work.
Yeah, some work. Absolutely.
And then in the
Okay.
cash, we now have the balance of $25,080.
Correct. Anybody
Okay.
disagree with that? Disagree? Please say so. All of a sudden, our cash has gone from 40,000 to what?
$25,080.
Money disappears quickly.
Yeah, that's sad.
Now, you haven't seen sad yet. Let me tell you what sad is. Sad is when you have children in university and everything you learn in life, you have to pay in university fees. That's sad.
That's powerful. In fact, that is powerless.
And university fees anywhere from 5,000 a semester to 30,000 or more per semester, depending on which university they attend. Now that, and if you're just a regular person, that is a nightmare. If you're rich like folk, not a problem. Okay? We're not talking about the rich. We're talking about the regular folk like we are. Okay, thank you very much. Good stuff. So please take notes, folks. Note when you get a homework question or an example, if money is paid in advance, there's a very unique transaction. We debit the cash because we take the money, but we credit a very unique account called unearned design or other revenue. Okay, because you have not provided the service yet. All right. Now, Hadith, you can pick it up. Collection on account.
Okay, so on July 22nd, Blue Design Studio receives 5,000 cash from customer previously billed on July 15th. So what
Okay.
we're doing in the journal entry On July 22nd, on the cash account, we're gonna debit the cash account for $5,000.
Okay,
And then in the journal entry, on the accounts receivable, which is also an asset, we're gonna credit 5,000.
good. Does that credit increase or decrease accounts receivable?
The credit decreases accounts receivable.
Oh, Garnet, my night is done. I'm so pleased with myself and you people. Absolutely. Okay? You guys are getting this even faster than I thought, because sometimes people get stuck. And you have to kind of go over it quite a few times until they get it. So yeah, this credit decreases accounts receivable, which means that somebody actually came back and paid you some of the money they owed. True or false?
Right, correct.
Yeah. So what account do we debit for 5,000?
The cash account,
And what account do we credit for 5,000?
we credit the accounts receivable.
So now what is the balance of accounts receivable?
4,600.
Absolutely. And this is how accountants keep track of transaction every single day. Both
And the
man,
cash account balance will be 30,080.
who agrees with 30,080 for cash?
Me?
Okay, great. We have a second. Yes. Okay. All right. So we're on a roll now. We're now semi-professionals. Let's move right down to Clinton. Expense paid in cash. What's that transaction?
Okay, that is Blue Design Studio pays 4,800 for 4 weeks of employee wages.
Okay, salary payment of 4,800. Journal entry.
The journal entry increases the owner's equity account, wage expenses with a debit. This
Okay.
decreases asset account cash with a credit. So
So
I'll be taking the 4,800 from, I'll be debiting from my assets, which is, no, sorry, I'll be debiting from owner's equity, the 4,800, and I'll be crediting that to the assets, because I'm still an employee, but it's still credit coming out of my pocket to pay the wages of
which
the
asset,
employee.
which asset account are you crediting?
The cash asset.
Absolutely. So now what is the balance of cash? Anyone?
The balance of cash after the 4,800. 1 second.
Yeah. Clinton is going to work it out and we're going to get a second. See if he did it correctly.
1 second, let me calculate this. Check. Okay, are we looking at 26,000?
Second? Do we have a second?
25,280.
Yes,
20
my,
Oh, sorry. I input my 2,800 wrong. I put 2,000 in, sorry.
that's okay. That's the difference between persons who have the same information. One gets it right in the test, one gets it wrong in the test. One gets it right at work, one gets it wrong at work, because sometimes we just miss. So don't feel too badly. It happens to all of us.
Hold on. I saw how you got your 2580.
Yeah, he still won't know how that happened.
25,280, right?
Correct, you correct. That's what I got. Same thing. 25,280.
How you got that one? You debit
Well, the cash was 30,080 just now. And so you credit the cash account, which means 4,800 as the minus from that 30,080, which leaves 25,280. Because I'm
you
keeping track like that.
my expense paid in cash right on page 53, right?
Yes. So when you add up all of that, yeah. When you add 40,000, 2,800, 1,400, and 5,000.
Uh-huh.
And then you subtract on the right to credit.
The
what you
40.
get.
Oh, okay.
Yeah. You see that now?
Yes, sir.
Yeah. Actually, the important thing is you said something, because you could have just as well not say anything, leave the class, can't sleep because you can't say, what the hell, how that happened, come back next week when it's still not clear, and trying to figure out if you should ask whether you should clear. See, so you did the right thing. Right? Don't be bashful. I always tell students, I don't care. Ask. It's like, I'm asking, like, how the hell did you guys get that? And then case closed. That's it. Okay, now Clinton can go to sleep after because it won't keep him up. Like, what the hell? I should have asked. All right.
Yes,
Who's next on my hit list after Clinton? Mario again. No, sorry, Mario already had a turn. Daniel, are you there now?
Nice.
Who's Daniel anyway? Daniel's left the class and gone to Fusion to watch a movie?
No, man.
Oh, just checking. Daniel must be somewhere multitasking. Or maybe Daniel's microphone isn't working. Either way, I'm being the devil's advocate to see if I can get her to come out from wherever she is. Okay, while we wait for Daniel still, Crystal.
I was thinking about going to Fusion Flex just now, wait, before you call my name, but okay.
Funny. I should go to Fusion too. Okay. So now, that's funny, Crystal. Trust me, I get it. Like right now, watch him call my bloody name. I always hated that when I was in university as well. Because sometimes I had some lecturers who would call your name. Others would come in, lecture, leave. They don't care if you drop dead in the class. But we had and we had some other ones. They knew you by name even. And they start calling you. And if they didn't know your name, they just point at you. Your name, and each other says, you. Okay. All right, Crystal, expense to be paid later. What's the transaction?
Sure. On July 30th, Blue Design Studio receives but does not pay the utility bill that is due next month of $680.
Sounds like something we do all the time, right? We pay, we get it, but we don't pay. But now watch accounting. Accounting doesn't care if you don't pay. Accounting, though, requires you to record the transaction. You follow me, folks?
Yes, sir.
Right.
We don't pay. We don't care if you pay later. That's fine. But you have to record the transaction now because it happened when? Now. Right?
Yeah.
The bill came when? Now. So you have to record it now. You don't record it when you pay it. You record it when the transaction occurs. Now, having said that, what's the journal entry, Crystal?
Okay, so we're going to debit this is a new expense, utilities expense for
Yeah, a new one. I like that. Now you're noticing something new. It's a new
Right.
one. Okay.
So debit for $680 and the accounts payable, we will credit that for $680.
Why do we credit accounts payable instead of cash?
We are crediting that amount because we are, what are we doing? We're paying that. We're paying it now. It's not due, but we're paying it now.
No, we're not paying it now. We're accounting for it now, but we're paying it later.
I mean, yeah, we are paying it later. Yeah.
Yeah. Little rule that will help you. Whenever you pay for something later, you create an accounts payable.
Yeah, they say, yeah, not paid until later.
Yeah. And
Right.
not later is always followed by an accounts payable credit.
Right.
Because a payable is what? In the accounting equation, what is a payable?
It's a
Payable
liability.
is a liability.
Yeah, it's a liability. All right, thank you very much. And so now we have an interesting posting. Nothing is going to cash this time. Do you see that?
Yay.
Yeah, where does the debit go this time?
We are debiting the utilities for $680, the expense. And so that'll be a balance there for that. But the accounts payable changes. We have now 3,200, 3,000. 80. So our accounts payable will now be 6280.
Any second? Anybody agrees with Krista? She says 6280, 6,280. Is that correct?
Yes, she's correct.
Okay, way to go, Crystal. Thank you very much. Not bad at all. Not bad at all. All right, Blaine, are you there? Or are you hanging out with Daniel? Blaine? Yes, my foot. Blaine and Daniel went to fusion together, apparently. Okay. Let's see while we wait for Blaine and Daniel. Denise.
I'm here.
Okay, Denise, I think you have the final transaction, which is a withdrawal. What happened?
Okay, on July 31st, Lucio's Blue Design Studio withdraws 2,800 in cash.
What did we say withdrawal was again?
What
When we
do you mean?
take money out of the
From the
company.
owner's equity,
Yeah, and what do we use it for?
personal use.
Good. That's what a withdrawal is. Okay. One of those things you just have to learn. All right.
Right.
Middle entry.
Okay, so what we'll do is we'll debit Blue's the withdrawals for J
Yeah.
Blue.
Yeah, a special account. We debit for the withdrawal account for how much?
2,800
And what do we credit?
cash,
Why do we credit cash?
because it says that we withdraw cash 2,800.
Yeah, money coming out of the account. Credit? Absolutely. And then we can now go back and post again. We have a new account again called withdrawal.
So we're gonna debit the withdrawal side, which will credit it, take it up,
Well, you debit withdrawals. What do you credit?
and you credit the cash.
Great. Perfect. What is the cash balance now?
Oh God. Okay, hold on for a minute. 1,300.
By the way, while I remember, please read chapter 3 for next week. We're rolling right along. Did we have the midterm examination discussion?
Not as yet.
Kiss my foot.
Is it 22,480?
22,480. Anybody agrees with that?
Agreed.
Okay. Now, did I say how long this semester will run for? Did we agree? How long?
Yes,
14 weeks. And then
14 weeks.
Weeks. So your midterm exam is going to be in week number 7. And so
Where
we
does
are
it fall?
now in week number what? 3,
wow.
which means already we have 3 more weeks left before your midterm exam.
This week, number 3?
3.
Yeah.
All I can tell you is get your own register and keep track. Time flies. All right. So now we have 3 more weeks after tonight before your midterm exam and 3 more chapters. So each week we'll be covering a chapter. So please stay ahead of the game. Do not fall behind on your reading. For those of you who haven't read chapter 1 yet, like Hervanique, who's just started, Dog Eat Your Lunch, Hervanique, Hopefully this is another cold weekend so you could stay in and read everything from chapter 1 all the way to chapter 3. Did you get that, Heavenly?
Gotcha.
Good. All right. So don't plan any dates. Tell your family members don't bother you this weekend. Tell Franklin you're unavailable this weekend. Whatever you need to do, because you have some serious reading to catch up on.
Excuse
Plus,
me, Mr. Wilkinson, is the exam in person?
I'm waiting for word from the Institute on that. I'll let you know.
Okay, if I'm traveling on a Monday, I don't know if it'll be conflicting with that date, so I need to know.
Which day is week number 7?
Well, I don't know if it's February 28th, because the exam will be on a class date, right, a Monday.
On a Monday.
Yeah, so 4 weeks from tonight will put us on February 28th.
That will be the date.
Okay, that's fine. Okay, February 28th.
Okay. Please
Thank you.
make that everybody. Okay. 4 weeks from tonight.
I'm traveling on that day as well, so hopefully it'll.
I'm traveling actually the following Monday, so thank God it isn't conflicting with that.
Absolutely. Otherwise, you'd have to do it a little before or some other off the wall thing that will make your life miserable. So that's great. Okay, perfect. So now you know when your midterm exam is going to be. Please stay ahead of your reading, stay ahead of, grab something at the end of the chapter, one of the questions, practice on your own. I will send you 1 or 2 practice questions from each chapter to help you to practice. Accounting is all about practice as well. You're not going to get all of accounting in your head. That's why I walked you through those transactions one by one by one, so you could actually physically do it, physically see it. And you have to practice your way straight through to the end of the semester if you're going to be successful. That is the nature of accounting, just like anything else. You want to be a good dancer, you have to practice. You want to be a good speaker, you have to practice. You want to be a good kisser, you have to practice. See, same thing. It's everywhere. Accounting is absolutely no different. All right? All right. So now that we're done with our transactions, please look at the exhibit with the summary. Do you see that summary?
Yes,
I hope your texts have that summary. Otherwise,
yes, it does.
good.
Yes.
Welcome to the beauty of accounting. After all that work, look what it turns into. And this summary that you see in that box, this whole thing is called the general ledger. In the general ledger in accounting, all of the individuals' accounts, all of the individual accounts are kept. And so you can see them all by name again, all the accounts that you managed and handled throughout these transactions. And of course, the text even went on to help you by saying which ones are assets, which ones are liabilities, which ones are equity and expenses and revenues and so on. All right. So if you look in your cash account, the cash balance is
51,800.
Oh,
cash, sorry. 22,480.
absolutely. Your debit or credit?
Debit.
Good. Your accounts payable balance, how much do you owe at the end of the month?
6280.
Debit or credit?
Credit.
Notice these T accounts or these accounts allow you to track all of your transactions and see where you are at a moment's notice. Do you follow that?
Yes.
Welcome to the beauty of accounting. So if your boss calls you 5 minutes later and says, what's the balance in payables? I need to know how much we owe. You don't have to panic. If you don't have any accounts, you have to go grab all kind of documents, say, hold on, I'll tell you tomorrow after I'm finished adding everything up. But if you are posting regularly, the information is always, for the most part, current. Okay? The capital account, what's the balance?
2,800.
The capital account.
28.
The capital account.
Oh, sorry, 40,000.
44,120.
44,000.
120. I'm obviously saying the wrong thing.
I see 40,000.
40,000.
40,000.
Okay.
Sleeping, we fall asleep on you, Mr. Wilkinson, but we got you, sir. We got you.
Yeah, you-
26 one.
I wonder what Mario's seeing, and I wonder what I seeing.
I
wonder-
looking at the 40 grand, but I wasn't too sure. So,
I-
you know,
I am a- yeah,
My brain and shut down now.
it's getting to
Oh, man.
it's getting to that time. Okay, we're almost, almost there. What's the balance of the withdrawal account?
2,800.
Receivables?
Yes.
Receivables?
4,600.
How much?
4,600.
Yeah.
Unearned revenue.
Yeah, all over. 12,400.
Unearned revenue.
Oh, Anna, all I see is revenue. 1,400.
1,400.
No,
Oh, goodness.
I'm doing it that way to tell you, you have to look carefully. You can't just look like through one eye, through bad glasses, through nothing like that. You have to look carefully, or else you're gonna get something different.
Yeah.
Design revenue.
12,400.
400.
Okay. Office supplies balance.
5,200.
52.
Rent.
Rent, 32.
What transaction would reduce the rent account? A debit or credit?
A debit.
Uh-uh.
The
What you
credit.
say it again? Well,
What-
if it ain't a debit, it's gotta be a credit. Say it again, what you asked, so I can make sure I understand.
What transaction would reduce the prepaid account?
Or it is the prepaid rent. Okay, prepaid.
Debit or
Credit.
credit? Credit.
Gotta be credit.
Yeah, credit, a credit.
Indeed. What's the balance of the office equipment?
16, 320.
320.
Okay. Wages expense?
48.
4,800.
Yeah. Utilities expense?
680.
We have all of our transactions accounted for, journalized, and posted. So now we can see if the accounting equation balances. And somebody, so let's go to the bottom and look at the total assets of 51,800. Where did that come from?
That's the
All
total
the assets added
assets.
together. So the cash, the accounts receivables, the office supplies, the
All
credit for
asset
the,
accounts.
Yeah,
Yeah.
all of the
Asset.
assets added together equals all of the liabilities added together. See that?
Mhm.
Yes.
What did we add together?
The liabilities and owner's
And owner's
equity.
equity.
No, we just the liabilities. What did we add together to get that number?
Oh,
Oh, the
you add the accounts payable and unearned design
Unearned.
revenue.
Okay. The interesting thing is unearned revenue is a liability, but the word liability is not there, correct?
Yes.
So be careful. That one is a little sneaky for students sometimes, especially come exam time. They say unearned revenue, like, but then you forget the earlier stuff from class. Unearned revenue, that can't be no liability because I don't see liability at the end, see? And I don't see payable at the end. So don't
Yeah.
get stuck on that one. All
Mm,
right. What is the total equity?
44,120.
How do we get that?
You add up all of the withdrawals, capital, design revenue, wages, expenses.
Well, just for the record, we get it by taking the initial investment of how much?
40,000.
So adding all the revenue earned,
Right, minus the withdrawal, so
withdrawal, and minus the
expenses.
correct. All right, if you do that correctly, you should get 4,120. If
Mhm. Oh,
we
Lord.
add our liabilities and owner's equity, our accounting equation should balance, and we should get 51,800. In the real world or your examination, if it doesn't work that way, you've done something wrong somewhere in the journal entry or in the posting. And so that's when people have to work late to find the difference. Ever heard that expression?
Yeah.
That's your business. If you're in balance, you can stay here to find the difference If it takes all,
Night.
night. Anybody ever been in a if it takes all night situation? No, that's good. You guys live in an age of luxury. In the old days, when I was a banker as a teller, if you don't balance, you stay there until you balance. Some people be there for 2 and 3 hours trying to find the difference, and they won't let you leave until you find it, depending on who your supervisor is. Now, after a while, they take pity and say, you know what, we'll try and find it tomorrow. If we don't find it, I'll eat your lunch. You have to take it out of your pay. Or the bank will write it off. It just depends. All right. So now the final thing we need to look at before we finish this chapter is the preparation of something called a trial balance. You guys see that?
Yes, we do.
The trial balance is very simple. Notice the name of the company is at the top, the name of the statement is in the middle, and the date of the statement is at the bottom. The trial balance simply takes all the debits and put them on the left-hand side from the T accounts or the accounts, and all the credits and put them on the right-hand side, and then add them up. If you did everything correctly, your trial balance should balance. If it doesn't balance, you made a mistake somewhere, and you have to go back to every single journal entry for the month and see if you journalized it correctly, and if you did, then every single posting to see if you posted it correctly. Does everybody get that? Any question on the trial balance?
Does the trial balance go in any specific order?
Meaning?
Meaning all your assets, all your owner's equity or whatever, or it's just debits on one side and credits on another?
That's a good question. Accountants do not like disorder, at least good ones. If you notice, this trial balance has a certain order. All the assets are first, right? All the liabilities and revenues are next, and withdrawals. Do you see that? Capital and withdrawals are next,
Yeah,
and the expenses are where?
last.
At the end. Now, if you don't do it in that order, but it still balances, then you still balanced. It's just that looking at it, it will look a little disorganized to a trained accounting eye. You follow? Because typically it would look like this one. Typically, assets first, followed by liabilities and revenue, capital and withdrawals, followed by expenses. That's your typical trial balance. Sometimes the trial balance doesn't balance, so you have to go back and try to find the difference. The text, I hope your text gave you these 3 steps for finding differences, did it? If you have an error.
Yeah, finding trial balance errors.
So have a look at that. Hopefully you don't ever need that. Okay. But it'll give you the steps to help you on how to find the difference if you ever have one. All right. They're not difficult steps. You just have to follow them. Okay. Now, notice just a little further down in the finding trial balance errors, there are some things that would have occurred that can cause a trial balance or a set of accounts to be out of balance. Okay. For example, it could be that a debit was entered in an account as a credit or credit as a debit. See that? That would create an error. Could be that the balance of an account was what? Computed incorrectly. You just added it up wrong. So there are a lot of reasons an error was made in carrying the account balance to the trial balance. So the cash account had a balance of 44,380. By the time you get to the trial balance, you put 44,480 for some reason. That will create an error in the trial balance. And the worst of all, which happens a lot, the trial balance is added up incorrectly. And then when you double check, well, some people don't like to double check whatever the first thing is, too bad. But the trial balance will be out of balance and force you to go and look for the difference. And you might find at the end of all that looking, you simply added it up what? Incorrectly. So it's always a good idea if you have trial balance out of balance to do what first? Anyone? Add it up again and check to see if you just added it up incorrectly. See my point? All right. Question on the trial balance? Pretty simple enough. Okay. Okay, I think that's all the good stuff for chapter 2, I believe. Do you guys have the chart of accounts discussion in your chapter 2? Chart of accounts.
Yes, I have it. I see it.
Yes.
Yeah, what did they say a chart of accounts was?
Oh, that's the thing where they like list accounts with different numbers and different meanings and stuff like that. Oh,
Yeah, absolutely, absolutely.
Found that on, please.
Yeah, I think they use it for, internally for the most part. Eh?
Yeah, and I have an exhibit that is showing the
Page
chart
43.
Okay,
Yeah.
thank you.
where it has the account number on the left. You see that?
Yeah, we got a million at work. I know what you mean.
So you know the million, yes. Okay.
Mhm.
This one is a small business account, so it's only a few of them. The account number, the account name, and then the description of the account: assets, liabilities, equity, revenue, expenses. Okay. So some companies have hundreds, some companies have thousands. They have an account for every conceivable type of transaction affecting that particular company. Okay. And notice the account numbers differ depending on the type of account. Okay. If it's a cash account in this example, it'll have 111 involved with it, so you know it's a cash account. 111 and so on. If it's a receivable account, notes, it'll have another number, 112. So the asset accounts are all what? 100s, correct?
Yeah,
All
all 100s.
liabilities are all
2s,
equity,
3s,
revenues.
4, and expenses is 5.
Absolutely. See, not difficult at all. Please, if you go a little further down, I hope they have this nice journal entry in its full form. Do you see it? Do you see that nice journal entry in its full form?
Yeah, I see. No, you mean with the chart of accounts?
Underneath the chart of accounts. You guys don't have that? Man, what kind
I
of
don't see it.
edition that is? You guys don't have an exhibit that says general ledger? With account with the general ledger name at the top, accounts payable example.
Yeah, we have that, page 59, exhibit 9.
Yeah. Okay, that's the same journal entry that we did individually for each transaction. All we did, for example, is to put it all together. So all the transaction affecting accounts payable would be in this accounts payable general ledger. Okay, and so you can see the dates and the posting reference, the debits column, the credit column, and then the balance, just as we did. Keeps a running balance. Are you guys looking at the accounts payable account in your book? Which account are you looking at? Which general ledger account are you looking at? What's the
That's the
name?
accounts payable,
What's the
July
balance?
2014.
Okay. What's the balance of your accounts payable?
Trying to see. Hold on, let me get that.
Right there in the text. The balance should be on the bottom right-hand corner under balance.
5280.
6,880.
Absolutely.
Yeah.
Mm-hmm.
And please, when you guys are reading it again, make sure you read all that stuff on postings. We've discussed postings. We've already practiced posting and all that kind of stuff, but still read it up so that you can kind of solidify it in your mind. Okay? Also, for those of you who are just reading chapters for the first time for some ungodly reason, except Veronique, please go ahead and read them if you haven't. Catch up on your reading this weekend. Don't fall far behind. It's going to be a nightmare. And also read chapter 3 for next week. I will be sending you guys some homework later this week. If you don't see anything in 48 hours, send me a note somewhere and say, excuse me, homework, I need to get started. Okay? So please do that if you don't get it within the next 48 hours. And the reason for the homework is for you to get credit for it. Remember the whole 10% plus, more importantly than the 10%, you get to practice. There's no substitute for practice. If you have to spend a couple of extra hours working through it, what the hell? That's what you become when you become a student. You are no longer your own. You don't belong to anybody else. All you belong to is the world of academics until your semester is done. Then you may go back to your normal life. Okay? Sorry, that's the way it should be. That's not necessarily the way it is. But if you want to be really successful at it, the weeks that you're putting in, you really commit yourself a couple of weeks, and then you can go back to a normal life when the semester is done and do all the things you love to do. All right, any questions, anyone? Wonderful. You guys continue to have a safe time out there, and I'll see you again next week, Monday. Again, you should get your homework in 48 hours. If you don't, drop me a reminder so I can get them to you so you can start practicing this exciting stuff right away. If anybody sees Danya, let her know that we were looking for her and we knew that she was at the fusion having fun while the rest of us suffered. All right, any other questions before we break?
I just have one question for the, in any exam, I guess midterm or final, more specifically the journals, the T accounts. Are you going to, for an example, list the titles so that we can, like how you have purchase of an asset on credit, we will know, or you're just giving us like a problem and then we have to go ahead and determine what to do?
Absolutely. By the time you get to your testing, either one, you will basically understand which accounts you're dealing with. Furthermore, the information will be such that it will almost tell you which accounts. And from all the practice you would have done, they would familiarize you with which accounts you're dealing with. So the only thing you have to worry about is actually doing the reading, doing the practice, and through that entire process, it'll make it far simpler for you to understand which accounts to use. Okay? So not to worry. We won't give you a list of accounts. By the time examination rolls around, you will have been messing with it for so much that it will come almost automatically. Now, if you're not messing around with it, like reading it, practicing, reading, then it might be a little Frenchy sometimes. But once you put in the read, practice thing, believe you me, Crystal, it really becomes far less challenging. Okay?
Thank you.
Absolutely. You guys continue to do well and be safe. I'll see you next week. Remember, if you have any question that you cannot wait to get an answer to next week, please send me an email or something, and I will be happy to respond. Veronique,
Hi.
you have information to send for me, and you have a whole lot of reading. No dating this weekend. You need to
I'm
catch
a whole
up.
bug on the norm, so I'm good.
Good. Fantastic. Perfect. I'll see you guys next week.
Thank you. Good night, everybody.
Good night.
Okay,
Yeah.
good
Bye.
Good night.
Good night.
Good night. Take care. Who's Kashanti Bar anyway? Kashanti Bar. Who's that?
Hi, that's me. This is my first class, so
Christian,
yes,
you sat through my entire class and didn't say a single word?
I was talking during the class. I even answered some questions and I asked when I didn't understand
Uh,
how somebody got the amount. I asked about it.
of the madness, that was you?
Yes.
You should have said something. You should have said, excuse me, I'm the new kid on the block. Let me just get this information. Kishan.
Right. Right.
Otherwise,
So I
you would have-
read. Sorry.
I would not have known had I not been looking.
Yeah, I do apologize. But I read through the first chapter. I started chapter 2, so I guess I have to just go over everything so far. So far, I kind of getting it, but I think once I do some more reading and I understand more terms, it'll be a little bit easier.
It will. Plus, I'm going to give you homework and make you practice. And the more you practice, the better it becomes. You cannot be better without practice. Reading is fabulous, but it's not enough. You have to combine it with actually doing the work. That's the reason why the homework assignment will come. So if you don't see the assignment in 2 days, drop me a note and say, well, you need to know how to reach me. That's the next thing.
Oh, well, I got your information in an email. I was
Okay.
just gonna send you email over with some questions I had.
Fantastic. Do that. Send me your
Oh.
phone contact as well so that I can know.
Okay.
Where do you work, by the way, Kishanti?
Fidelity.
Okay, perfect. So do that for me. Catch up on your reading this weekend, like the other, like Hervanique. And if you do that, you guys should be fine and ready for Monday's session.
Okay, not a problem. Thank you.
Quite welcome. Take care.
Good night.
Bye-bye. Good night.